I never professed to be, and I've actually learned a great deal, with the way sometimes the questions are asked. And yeah, sometimes I get frustrated, but that goes to my character. It has nothing to do with you guys. So I'm grateful for your participation, because the value that I get in it, to me, there's value, a real value. I mean, emotional value is sometimes more important than money, and so to me, it's a win-win. Thank you, Andy. All right. This is the post earlier this morning. I'm going to adjust the fonts a little bit larger on the screen. That way you can read it a little bit better. All right, I want to share something with you guys here. I'm just typing it up right now. I'm almost done. This is kind of important because this is a tool I'm going to give you guys, and it's not something you're going to use right now. I can promise you that. It is definitely unique. So just bear with me while I finish typing this out. And then what I'm going to do is oops. Yeah, I think part of this is firstly, you know, the cohesion that you guys are developing is a big win. Okay. All right. So I'm going to talk, and if you understand this, just type yes. If you don't, type no. Now, it isn't what the class is primarily for today, but it is something that I was thinking that I ought to review with you guys because it's a very powerful tool, and it will open the door to a lot of things that you may never even have dreamt of, and the combinations that it can give you are pretty significant. And I know that some of you guys are lacking in your Excel capability, and I suggest that you take a class or work with somebody that is really intimate with Excel so that you learn this, because this will give you a tremendous advantage. Okay. All right, so let's talk. I'm going to show you over here. I'm going to show you on the chart. Now, you know, you guys are looking at a few studies, and you're looking, you know, you're doing a little bit of scanning, and you're looking for opportunities, and all that's great. But I want to show you a capability on a workaround that I came up with that works well. I mentioned this to Andy just in passing, but I wanted to share this with you guys. All right, so for every custom you have inside, so when you go into available items that you can use in watch lists, you go down and you have custom quotes. And I believe the total original custom quotes that were in there are something like 19 or 20. And so just for clarity, so for every watch list that you drop it into, or even if you drop it into to a scan, or you drop it into the option chain, TOS limits you to 1,500. Okay, and so 1,500 is a lot, and you may only be needing a few that you're really concerned with. But having things in watch lists all over can actually cause some problems. So I want to talk to you guys about something that I use, and I use a lot. And there's several different ways this can be done. And the way that I'm going to explain to you, and again, this is for edification. It is not something that you're going to be putting into work, not immediately, but over time, once you understand this, you'll know it, and eventually you'll have the ability to develop this on your own. Now, there are some tools that I'm going to give you that actually have this incorporated, and there are some tools that I currently use, and I don't want to give you all the stuff that I use because it would just inundate you and leave you confused as to which direction to go. And I think, you know, staying focused on a few strategies and getting really good at those is the first step, and then you can expand and pick up more things. But this particular tool, all that being said, this particular tool is very useful. Okay, so in here, for custom, if I click on that and you look inside simple moving average, okay, so all I'm looking at is the simple moving average. Now the simple moving average it is not all that simple, right? And then some of these are more complex, you know, days to expiration, right? It's just so it's going to give you a numeric value. Okay, but in most cases, what you're looking for when you're doing a scan is a true or false. It's either false being 0 and 1 being true. Or some programmers will say no and yes. Yes is 1 and no is 0. Okay? Now, why is that important? Because in one of these, in just one of these, you can write in here a series of different conditions, and then you can add those values. So, and I'm going to actually give you an example of how that works, and then eventually I'll give you a couple of spreadsheets and you'll see how that works. And so let's say you decide you want to, in one custom value, you want to send 32 custom values to Excel. Now I'm going to show you how to do that. And so that means you would need 32 customs. Normally that would mean you would need to go into here and create, for the custom quotes 32, but they only allow 19 or 20 in here. But I'm talking about for each one you can do 32, and I'm going to show you how you can do that. And here's a simple, and I know it's kind of alien to, it will be kind of alien to most of you. And again, and I know that some of you won't even see it as a value because you're just thinking more graphical than anything, right? So it is a problem. So let me see if I can give you the basic math here. And by the way, this is what I mean when I say more time to prepare, right? Because I like to, this would have been something that would have been nice to actually had done, not here. Okay. All right, so let's just say we're looking for white, okay, and it can be red, okay, and I'm just typing these out really simple. So red, maybe the next one is going to be red, okay. Now I don't need to do all these for the message to become clear here, so I'm just going to do a few. And unlike most of the stuff you're familiar with, this goes from right to left instead of left to right. Okay. So are any of you guys familiar with binary bit positions? Do any of you have knowledge of that? Okay, that's one. Anyone else? Yes or no? Okay. I'm gonna take that as okay. All right. So I'm just gonna give you a kind of crash course, and then I'm going to tell you the value here and why this is important, and why on some of your studies you can make this a lot easier, because instead of having a limitation, of on so many different things, instead of having a limitation, I can give you the ability to drop 2,000 character or 1,500 characters in a watch list. Okay, so one watch list with 1,500 characters, and have 32 different signal combinations in an Excel sheet. So think about that, 1,500 in a watch list, right? And from those 1,500, have 32 conditions that you can pick what you want to look for. Okay, any combination that you want to scan out of those real time as it's happening. Yeah, you can sort it as long as you sort with and carry the others over. So yeah, you'll be able to sort. So, but you can't put a header. So you won't be able to have a header. So unfortunately, there's no way to do it with a header that I'm aware of, unless you put the header to the bottom. Now that wouldn't work. I don't know how to do it with a header. I wish I did, but I don't. I mean, maybe there is a way. Well, there is a way I could do it with a VBA so that it will go ahead and insert afterward and delete when you start. But so anyway, okay. So you can pick any combination. Okay, RSI, and it doesn't matter. RSI is greater than 70, right? In all of these different things, you are developed, and the code is put into one custom value. And the way it works is, and I'm just going to type these in because it's just easier to do it this way. Okay, so the way it works is you go all the way across, and all 32 have a value. And so when the condition is true, it will add 1. So it will add the decimal value. So let's just say if we have this is true and this is true, 64 and 4 is 68. There is no other combination that can add up to 68. So when you send from the when I give you the custom code to drop in, so like custom 5 or whatever you drop it in, it will give you all 32. Okay, I can give you the ones I have, or if you want custom ones, that's fine. I don't really care. All right. So when you're running this, remember, if you put 1500 in there, that's the only place it can be is in one watch list. But it gives you 32 combinations. So you can put in, low candle, the low of the candle is greater than the upper Bollinger Band. It's either true or false. It's 0 or 1. So if we go and we add, right now we've added this one. So I'm just going to, I'll highlight this. And now you don't have to do this, all the code here. I've already did it. All you have to do is use this however you want. And I'm going to give you an explanation. Yeah, and again, I think this is a very important tool, especially going forward. 64 and 4, that would be these two, right? And so look, if I add 1 or 2 or 16 or any other number, no matter what I do, you can't mix other numbers up to make that number. Okay, you can't, like if I go 3, right, would be these two. So the decimal value that you're sending into the Excel sheet will be one decimal value, and the decimal value for the 32-bit is fairly long, but it doesn't matter. It's just a double and toss. Now let me see if I can pull it up on a calculator and show you how this works. And then let me go to binary or programmer's calculator and see if I can pull it up. So I'll go 1, 2, 3, 4, 5, 6, 7, 8. Whoops. Give me 1 second. I gotta put the right place. I'm gonna do binary. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. Okay. Okay. So if all conditions are true, then this is the decimal value that you'll get back. So in the first cell of your sheet, you'll have just a decimal value. But then inside, there's a code a macro that I run to populate going across, and it will populate 0 or 1 for each condition. And then all you have to do is mask. And what I mean by mask is, so on your sheet, it'll all be zeros or ones, okay? And then down the side, you have uh, basically it's kind of remember, this is a full matrix. It's left and right, so you're dealing with X and Y. So then on the other side, you're looking at going down on the left side, you'll have all of the ticker symbols. Okay, so let's say all the way over here, and I know this is a bit much, and so over here, you'll have the tickers going down, okay, and then you'll have two rows here. So you have the tickers going down here, okay. Then you'll have the long or the double here. So you have the number that could be from 0 to, let me find my calculator. Okay, so the number that you could have, I can't see it. Oh, there it is. Crap. I wish they would have put a tack on the calculator to make it so you could stick it on top. Anyway, so you have the tickers going down here on the left side, and then right here you have the long number, which is this number. And then what it will do is it will automatically go across and populate all the values going across. So it will basically decompile this string and start off, if the first one is a 0, then a 0 will be over on the first one. If the last one is a 1, it will be a 1. So it will actually repopulate. So in TOS, we convert it to a binary, and then we convert it to decimal. And then after it's transmitted through the RTD as a double, okay, then once it's into the Excel sheet using RTD, then the macro will convert it back into basically a string. And then what you do on the right side, right, all the way to the right side, is you have a truth table. So you'll put an X. If you put an X where the negative 23 is, and the X where the R is, and the truth table, anytime those conditions are true, you get an alarm. Okay, so specifically, you can use this truth table for daily or weekly. Don't even try it for weekly or daily. Don't try it for intraday. It will just drive you nuts. So I want to let you guys know this is a tool that I'm migrating out some work that I've done to give this to you, because there's some studies in there that I'm not just simply not putting out. And so I just want to make sure that the sheet that you have will have all 32, okay? And basically, now keep this in mind. That's 32 combinations of various signals that are, in my mind, most of them are important when they work with paired sets. So you have that and the visual tools, the visual, how to read price action and everything going on. So I'll complete the matrix and I'll get it to you. And this is another reason why I have so much on my table that I can't really function very well with the Monday, Wednesday, Friday crap with the therapy, and then the back work that I haven't been able to get done. And I just feel like I'm dropping the ball here. And I'll be honest with you guys, it's not any of your fault in any way. But when I took on the responsibility to coach you, I neglected literally, possibly thousands, if not tens of thousands of others. I'm not trying to make my head seem big, but that software, once it's finished and it's put out there, is going to help a lot more people. And I just think that I don't have the right perspective for going forward right now. So Andy's message came at a perfect time. I was already feeling a little frustrated, some of the repetitiveness of some of the stuff, and and of course it's all. And again, I'm new to all of the teaching and the coaching part of this. So, but it's like I say, I've learned a lot, and I'm grateful for that. All right, so I hope this is clear to some of you guys, and for those that it's not clear to, don't even bother to talk to me about it right now. When I get this out and a few of you actually have the sheet and understand how it works, work with your other teammates, because I know there's a few of you that are going to get this right off the bat. Ronnie, I do feel like that. I mean, there's times I don't feel like I'm fully serving you guys at the top notch that I could be doing, and maybe that's a personal feeling that I have. But I know that I've given you guys more than enough to be successful on a path that you weren't on, and I don't believe any of you guys were on the right path to becoming successful. That's my own opinion. And I think all of you have been given more than enough tools and enough, ways to look and observe the markets to now give you an opportunity to trade in with a peaceful heart and mind. And so I mean, that's kind of what I've been trying to do. And so I think Tuesdays and Thursdays, you're all welcome. You really are. So Tuesdays and Thursdays will be what we're going to be looking at. And now, before I finish migrating this work that I have into something for you guys, if there is any signals that you want paired up in the code that you're going to have to drop into a custom column, you need to let me know so that I can add it in here, because I have 32 spaces. Now, if you want to do two 32 spaces, then you have 64, but 64 indicators or combination of indicators, which is unheard of. It's absolutely unheard of. But you can have up to 64 for 750 tickers. So if you want that, I can give it to you that way. So you just have to let me know. Now, I actually can run up to about 400 total values in binary, okay, on the 50 that I had. Okay, so I had an unbelievable number of combinations that I could monitor. And it's impossible to monitor these in charts or in watch lists. It just simply cannot be done on any other trading platform that I've tried. Yeah, I think 32 is pretty significant. I mean, some people are looking, and now again, I don't use all of these signals as precursors for entries. I use a lot of them as confirmation, but there are some that you can use for entry. One of them would be one of them is I'm trying to remember the name. Hold on. I wrote this code a while ago. Let me see if I have it here. Okay. So originally it was developed as a RVI, which is a scanner that I use, and the original was by Ehlers. This was his original code. I'm going to share this with you guys. Now I'll give you this one. This is the one that I actually do use. Let me get the room up here for you. All right, that was the original code. I did not write that code. That was written by that guy, or somebody wrote it for that guy. But that was his code, and as meaningless as that is to most of you, when I first saw that code years ago, I thought it was nonsense. And then what I did was I rewrote that code myself. And this is what it looks like now. And I want to tell you a little bit about this. So this is the same code, right, from here to here as above, okay? Now, tweaking this number helps. Now, this code right here is probably one of the best codes that you can have in the sense of, although it's lagging, it's still one of the best codes that you can actually have as an indicator, a real indicator for a buy, for actually getting into a position. So in the Excel sheet, I actually have that study, and I actually have it in my so I think I have it like over here somewhere in my values for what I use. So it's a big number. So when you look at it, it's a pretty big number. So but anyway, at the end where it is, and then the macro that actually breaks it back down and populates it, it's just another indicator. But when I have that indicator and I have a white dot, that's 100% probability. And I call that, actually right now, I use that in a trade indicator that I don't want to put out to the public. That indicator is called the Cyclops indicator. And I call it the Cyclops because of the great mythos that a group of people offended their god, and that god, which was Zeus, uh, gave them what they wanted most, which was the ability to see the future. But the future they gave them was the only one future. It was the day they die. So they had this incredible forward sight, but they could only see one thing. And so I named the study. After that because I felt that it was really good because it only gave you one focus. It gave you only one result. So I thought that was a great example. And so let me. I'm not going to load everything up in here because this whole computer. I just got it set up, and let me go backwards here for a second. Okay, let me. I got to see what the message is before I go forward because I don't want to. Yeah, see, I'm clicking on the Discord room and I can't even find you guys. It's just pissing me off. Okay. Yeah, I can't see the Discord room, so you can either whatever you guys are typing, I can't see it. For some reason,
it's nothing important, Kevin. I'll just putting a link in there to the ETHLAW's relative Viger index, which is what's at the top of there. Are you listening, V?
All right, I'm back. You guys hear me?
Yeah, I can hear, mate.
Yeah, a box popped up, and Discord was updating apparently, and because maybe when I installed it, it didn't update or something. I don't know, but it would give me an update dialog box. It's kind of odd, but yeah, I never looked up Andy, what other people used it or called it, or I just test them, right? And if if the test is good, then I'll use them. So, and again, the platform retains your studies, any studies you leave. You can see they're all here. This is a totally different computer. I didn't change. I didn't change this. So uh, if we look at it, right, we go through here and look. I have DMI, which is fine, and then multi-frame stuff, multi-time frame stuff, squeeze, war, white. Where is it at? RVI. Okay. So this is now, and the only reason I'm even talking about this is because this simple little code here is in a custom column code with a total of 32 to create my string, and so it's good for I don't have the code because I wrote this one a while ago, but yeah, you always drop it to the bottom. I need to add code before I give this to you guys, so it's automatic. I mean, so I'd have to add the code in here for this. So I mean, you wouldn't run this for the 1 minute. I mean, some people would, but I mean, look at the 1 minute. What are you going to do with that, right? And it's kind of really hard to get the idea here. But let me go over to, just as a quick example, see if we can actually see something useful here. All right, so like here you're at the highest point, and then it dropped. Obviously the cross is not what you want to look at, right? Or the exact cross. So what I have is I have a condition, and in my code, the condition on this cross, okay, requires another condition, and between those conditions, that creates a validity to it. So let me just see if I can find one, and then kind of drive this home. So anyway, I don't see anything right here, but let me move around a little bit to see if I can find anything that actually fit. Here we go. So right here I have a white, and we have it's kind of doing its own little helix thing right there. Anyway, so we have the white dot there. Okay, so I have these two, and I have another indicator, which is the PPS, the person's pivot. And between those three indicators, when this happens at the end of the ski slope, you find that what you think is going to happen is actually counterintuitive, because looking at this, you think that when this has happened, it's going to go ahead and it's going to move down, and all of a sudden you're going to start seeing red bars. But in fact, at the end of these ski slopes, often when this is up high, what happens is it will go ahead and start painting the cyan, and it will just turn around and pick up. So this is, something that you see quite often. And the indicators, as far as I can tell, I've not had it fail yet. So in the Excel sheet, when you have that, you have those combinations that you can mask. And so when you get to that point, work with everybody in the room and figure out what combinations you want to mask versus what you don't want to mask. All right, so let's look at this guy. Okay, so here we have the white, and we're pulling down. Okay, and this is quite a true ski slope because there's a little bit of a bump. Usually I want to see it pretty solid coming all the way down. But nevertheless, I actually had a strong indicator on this going up. So, and I'm looking at this over about a week, and I expect to actually see this thing pop up. So right now, if I grab the channel, or basically the support line, I'll just pull it down. You'd have to back out to see the whole thing, but it's actually probably right there where it's going to actually bounce off. So tomorrow it could very well be a gap up. It could very well be a gap up, and there is a chance it could gap down. But the indicator that really doesn't lie to me, or has not lied to me, or misled me. It's just not 100% accurate for the next day. So timing is always a factor, of course. So, but regardless, I think that that's just one that will be in the string, in the binary string, to create the decimal value. So when you look at the Excel sheet, when you get it, uh, all of these will be clearly spelled out, all the ones going across, right? And it may not be what you're used to, and then it will carry over so that up above, and all these I drop down so you don't even see these when I'm done. I just bring it all down. So when you're all the way over to the side, the only thing you see up here is, so you won't see all this whole table populated with zeros and ones. All you'll see here is above, it will say, like for the first one. So like for the first one, it'll say white dot, right? Now it doesn't say white dot on the current one, and I can move that stuff around. So all the way over here, 32 over from right here at the top, right in the top, it will say white dot. And the next one could be like white dot, one bar back. So it would be in a square bracket, right? So you're looking up here, and then down below, all you do is add an X on the ones that you want to represent the ones that you want to represent the ones that you're monitoring. And then what it will do is over here, it compares, it will look at a condition. It's basically just a math routine and a math routine and a logic routine. And what it will do is it will compare this value to the value over here. And then at the end, if all conditions of X is equals 1, then it will actually give you a buy signal, right? And it's not for selling, it's just for buying. So, all right. So do you guys get that? You understand that? Yeah, it's a little bit much. I'm sorry. But the moment you have it, it will, for some of you, it will just immediately make sense because it's very clear the way I'm laying it out, so that you'll actually be able to just, all you're doing. I don't know if you guys know what a truth table is, like for a logic compare, or if you have think about if you have 8 oranges in a row and the fourth one over is an apple. So the fourth one from the right is an apple. And down below, you have to pull pins out so that only certain sizes fall through. And the apple happens to be smaller than the orange. So the apple you can filter through and see it, right? That's what the masked table does. It allows you to actually be able to filter out and only use the relevant filters to represent the comparator that you want to use. So again, it is the top-notch level of being able to trade with a shitload of ability on how you want to scan. So without running 100 different scanners every day, all you have to do is just create one watch list, drop them in, and all of the conditions and variables will be right there in one sheet. Okay, it would just save you a shitload of hours of work every day. All right, I mean, it's literally will save you a ton of work. Yeah, so I'm going to finish that up and get that over to you guys. So again, so on the top, all you're doing is, you'll see the only thing you'll see is that over here on this side, all the way to the left. All right, some of you guys are looking at AMD, so it'll say AMD, and you'll have a long ass number, whatever that number is, but you won't see it because it will be all of these going all the way over will be dropped down to 0 on pixel size, so you don't see it. But then up here above on these ones going over on your sheets, it'll be a little bit larger, and all you do is, this is one condition, okay? And let me just say white dot, okay? Whatever the condition is. and all of those will be in there for you. And all you do is you go through. Yeah, I want to see a white dot. Yeah, I want to see RSI. Yeah, I want to see above Bollinger Band. Yeah, I want to see a red candle, you know. And you go through and you check them all. And then over at the end, the very last, at the end, it will give you yes, conditions met, or no. It will either be green or red. And then the next one over will be alarm, on or off. If there's an X in there, it will make an alarm. Okay? It's pretty simple.
Hey,
Yeah,
Kevin.
actually, in the Scalp XLP, I mean the XLS, you were asking for a counter, Andy, and the counter is definitely something that's useful because you'll find on your scalp trades that you'll find a typical number of bounce or counts before you actually need to exercise your trade. So like 3 bounces is something you would avoid, right? Or counts. So, 4 or greater would be something better.
Hi, sexy.
I don't feel like it.
You are too. I'm sweating.
One is,
I'm sweating so much that I want to explode.
okay. Yeah, I told you guys I trade from tabulation. I don't trade what you're doing. I only made those tools for you guys to get your mindset into some things you need to do rather than me just handing you a tool to use that one day will have to be changed, modified, or will become obsolete. The goal was to teach you guys to be self-servient to yourself. Yeah, actually, and not all of those are what you have there are fine, but not all of those are conditions that I actually have in the sheet. Now, however, on mine, I did add because I had five bits left. So think about 32 bits, okay, or bytes, and the whole bit is 8. So if you look at it from my perspective, I had 5 left, and I just added. I added one that V had talked about. V doesn't know about the binary stuff that I was doing, but he had mentioned about the VWAP. So I've added high a day and VWAP as a condition, and so high day and VWAP 3% as a condition. So I have 2. I have high a day VWAP plus 3, and I have low a day VWAP minus 3 as now new conditions in my sheet.
It's true. It's true. It's true. I did that.
So anyway, you'll have a breakdown of what's in there. Most of the stuff you are probably already using. Some of it you've never probably even heard of. But again, it's not. You cannot do this in any other platform. It's impossible. It's just simply impossible. The system would just stall. But being able to export it into Excel in this string format makes it really easy, for it to run because the newer XLs are multi-threaded, so it really will kick. I mean, if you're running something newer than 2007, you'll be even better off. I only run 2007, but if you're running something better than that, as I understand the threading, it's programming terminology. The way the coding works is every module gets a thread, and it gets a thread handler, and so it actually will run much better in newer versions of Excel. All right, so I mean, I know that what we were supposed to talk about in the class, and we didn't get to any of that, but I think letting you know of some stuff that's coming up and the change in the schedule are all important. Yeah, there's a few studies V has seen me use, and I know that Yeah, I know that there's some studies that I use that everybody would love to have, but the problem is, y y the moment those get out, then that opportunity that I exercise is gone, and I can't take the chance. I just can't do it. So, but I can put it in a way that I can give you a bunch of tools. Uh, well, like this one tool alone. This one tool alone is worth a fortune. I mean, think about having 32 conditions that you can use as a masking for creating confirmation to a signal or confirmation to confirm that you were right. So, there's some yeah. There's two studies that I run that I won't release that I've told everybody about or have mentioned to other people about are both the Midas and the Cyclops. The Cyclops because of its accuracy, and the Midas because it tends to give me trades that more than half of the trades end up with gaps. And so I just call that one the Midas because unbelievably how many times that one kicks out a gap, and it deals with a couple variables using it's called a fractal. And I'm looking for patterns within the stock pattern that can be identified that tend to lead to a position either up or down. And so that particular Midas indicator gives me a real high accuracy, uh, for the type of trading I do with that. Yeah, in TOS, all you have to do is drop in the custom code and reference the same custom code in the Excel, and you only have to reference it in one. When you get it, it will be in the first row, and then you can just add your own tickers. So it's basically select the row and drag it down. So you have to do the whole row because you have 72 total cells that you have to copy down. Yeah, I can give you the RVI study right now. Again, remember on its own merit, it's okay, but let me go ahead and give that to you.
Go get a towel. I don't want to burn your rice. Oh God, really? I burn your rice, Alan. You can't eat. Because it was sweet. I was telling you it was anything.
Yeah, I can do that. So if you want to add that, Andy, to the scripts room, I'd appreciate that.
No, you did not.
Oh, I was looking, I heard a beep, but I didn't see anything. Oh my gosh, I'm getting old. All right, so let's look at it. Okay, right here, a couple things to pay attention to. So right here, you can see, okay, this is a divergence right off the bat. Okay, so that's a tell right there, and this is very clear. Red means your price is consolidation, so it's basically in consolidation right here. And coming off of red usually is when it will explode. So, and you guys already, I've talked to you about the consolidation, and I'll also talk to you about the white dot. So now you don't know if it's crossed 1, 2, 3, 4, 5 times, and you don't know how many times represent that it's finally done and it's moving off of it. You don't know. But when you have a white dot, okay, and you have a cross, so this cross can't be recorded on this day because it happened after. So this cross occurred on this day at the white dot, and I just picked one randomly for your example. So here's a white dot in consolidation. Always when you have consolidation, you have a move out, up or down. You never know which way. So, and in this case, we were already moving in the trend this way. So it's likely that the trend will continue up this way. Okay, likely, not always for sure. But in this case, with the indicators that I have up here on this white dot, if you would have, near the end of the day or the next day, took a position, you had the white dot, you had the divergence of the indicator, you had the cross, okay, and you had a reduction in candle size between these three, larger, smaller, smaller. Okay, for the last day, so larger, smaller, smaller. Then the next day, if you would have taken the position entry or this day at 3:45 and you took your trade, this is the trade you would have seen, right? It would have been up, some consolidation, up, a gap. So depending on whether you were doing, and this is daily. So this is a good example. Now for me, I would have entry on here, okay, and exit at that purple dot would have been a good exit, okay. The cross here, you're seeing the cross there, but there's a chance that that cross wouldn't have happened into between these. So there's because this does have a little lag on it. So this cross likely you wouldn't have seen on this day, but you would have seen it on this day. When the moment that this started pulling down, then this purple would have been painted, on the lower chart here, and then the cross would have appeared. So you would have both the cross and the dot. And so here's an example of getting in, early here, later here, and going in and getting out, maybe in the middle of the day here, unless you are able to time a better exit. But that's pretty much what it is. In a nutshell, if we look at it realistically, you're talking about $11.19. Okay, and if you look at it, this is at this point in time, this was a stock that was only trading at $32. So you're talking about basically a 33% move of the stock price. That this type of indicator, along with some of the other stuff you're seeing, clearly gives you a good indication. So now there's so that's an example. Now here you can see the overall trend is up and the overall trend is up. Okay, so to me this is very clear combination of indicators that represent a time to go ahead and take a long position. So did that help explain that, Andy? Somebody asked a mini lesson. You just got it.
Yeah, that's good. Does it only work in divergence then? Can you hear me, Karen? Can you hear me?
I can't hear anyone. Yeah, no, I can't hear anyone. I don't see anyone talking. I don't see any green around anybody's mics. I mean, avatars. Sorry. Well, the divergence is more or less a bonus. The reality is that it's not really the relevant point. The relevance is the cross and the dot. But divergence is like many different indicators. Divergence is a precursor to change in direction. Now the difference with the you know, when you actually look at this indicator, unlike, like as an example, the RSI, right? You know, you're looking at the vigor index. Relative vigor index is basically, it's the strength of a trend compared to the security's closing price. So it's a different kind of indicator than like relative strength on its own merit. So to me, it has value, but again, no technical analysis on its own, none on its own, to me, is a buy signal. I need price action, you know, I need other things to you know, coming into the trade for me to feel right about a trade. Let's see, it was a good example in here. All right, so here we have a white dot, and we have very clear cross around the same time. May have been in the morning or may have been the previous day. And so on the look back, so I say within 2 bars or within actually within 1 bar and the custom code. So in the Excel sheet, that's what you get, you know, and if you want to change the custom code, you can. So it's kind of broken out really easy to make changes. So, you know, here we're showing good separation, and then we came back together. You get a buy signal. So taking a buy signal right here, going up, you know, it's kind of a good way. And here on the cross, you can see here's the cross. Cross is a good point, or a cross with a purple dot, like I said, is a good place to get out. So that's another example. Let me find another ticker so we can give you another example. All right, so here we've been showing, you know, just basically it's been just driving down for a while here, you know, and now you never know when the peak is done. I mean, right here we know because we can see it, right? But we didn't know if this is going to continue up or not. So when you're looking at this, you come down and you look at your indicators. You look at every tool you have, and you try and determine what's going on here, because I have very, very clear. I mean, there's no contesting at all that there's very clear divergence between the two. So there's something going on there. So on its own merit, I don't use divergence alone. I'll use things to assist me. So, you know, when I look at going from this size candle to this size to this size, I see momentum going up. And then when on the third candle, when I see the momentum is either less, okay, or substantially more with longer shadows, I use that as a price action indicator for a possible change. But in this case, I'm not seeing that. The only thing I'm getting here is that I had divergence and had a cross, you know, right around the white. Okay. Now, again, the white right here is right at the edge of the bar, so it probably wouldn't have seen that, and so you would have had the white and you would have had the cross probably been defined by the next day. Remember, this is slightly lagging, so that cross you see now is not what you would have seen if these bars didn't exist. So just keep that in mind. That's why you have to study these before you even implement them, and that's the best way. So here's Merck. So Merck, the ticker we're on. So here, from what I'm looking at, having this indicator and the cross, you know, like I say, I'm not sure that the cross would have occurred. So you may have entered on this bar, or you may have entered on the following bar, just because of the timing of the cross. And so using the cross and the white bar within 1 bar is not a bad signal. So even if you did get in here, you would have been getting in here on. And again, for options, this is for a lot of people would get stopped out to sell options. They would just say, I'm out. But when you have your commitment based on your tools, and your tools have a certain probability, your studies will show you that often you'll see a candle up before a pullback. So on your studies, when you create your patterns and you're doing your samples and you're collecting your samples, you find this 80, 90, 70, 60% of the time. Well, that it's not there every time, so you still have to make some investment commitment here. On the next day, because you went short and it did pop up, and your study and your sample showed that, that's just an opportunity to add a few more contracts at a better price. So the problem is when you do your studies and you're pulling samples, and the samples that you pull, if you find that there's the times it will do this, you're kind of obligated. If you enter here, you're kind of obligated, or you're already committed into a trade based on the fact that this does happen and it goes down. It doesn't mean that you panic and get out. Okay, and again, by far the majority of people trading options would have bailed. Okay, and they would have been wrong. And that's my experience. I've seen it. I've watched it. I used to do it when I first started out before I kind of realized that there's other things that were going on. And it's like Andy said, about bailing and or he stayed in and then it bails, right? But how many times, Andy, think about it, how many times realistically it did go further, and then finally when you were out, did it come back? And yeah, sometimes it came back in a big way. And that happens to a lot of traders. Yeah, exactly. Yeah.
Can you hear me on the mic now, Kevin?
Yeah. So when you bail early, you're bailing premature. When your own work, if you guys are actually doing the work, you know that you have. I'm just going to swag a number. 70% of the time, it has one candle up before it goes down. Well, that means if you don't take the trade, 30% of the trades you're going to miss, and 70 you're going to go ahead and be able to get in here. Okay, but do you get in the morning or do you get in the afternoon? That's the problem, because sometimes it's a red candle and sometimes it's a green candle. This isn't about the pain threshold, Annie. If you know that in 25, 19 of them work this way, and then you worry about pain, the problem is that without having those numbers, the pain is you're blind. You get blindsided by that, right? But at least then you know that in your samples, you're going to get X number of wins and X number of losses. And then it's just a matter of just a numbers game. It's just like a video game. It's no money on the line if you really try to put it into perspective. I can't hear Andy at all.
Can you not hear me at all, Kevin? No. My green bar.
I see him talking.
Yeah.
Kevin, can you hear me? Hello, hello, hello.
I'm going to increase your user volume to 200%, Andy. Still don't hear you. Maybe I should mute you and then unmute you. What happened?
Can you hear me now, Kevin? Can you hear me now, Kevin?
Yeah, I'm on the other system. Like I say, I don't even have everything installed on this system.
Yeah.
Let me go to the Discord server control panel and see if there's anything in there I'm missing. I mean, I didn't change the setting, but I did upload it. But the server settings should stay the same. Let me just double check real quick. Server settings the same. Let me check my settings. Oh yeah, see now it's yeah. Okay. Input device. Output would be speaker high definition. All right, could somebody talk? Anybody talk so I can see if
Hello,
this.
hello.
Oh, I'm getting a whole bunch of people now.
There you go. You've all turned up. We've all been asleep.
Oh, okay. So okay, just so you guys know what I did, I went into my individual settings, voice and video, and the input output devices were both at
at default, and neither of them, the mic was working, but the output device was not. It was on default. Well, the default is probably my headset that's laying on the floor. So I just changed the default, the output device to speaker high definition, which is on my desk. I'm sorry, I had no idea. No wonder it's been so.
We forgive you.
No wonder it was so quiet.
I just wonder, while we've got that up, Kevin, could you explain the difference in the two different coloured lines and whether the cross, where it happens in the vertical, has any bearing on its meaning?
Again, I mean, the color lines are just the default lines that the platform is picking, because in the code I didn't pick a color. So let me show you that. Now, normally in my code, normally in the code under plot, I'll put in something like, I'll put in the color that I want each line to be. But in this case, I didn't code it in. So if you go to, so the color has no bearing. So like right here, if we go in here, you can see I say, okay, so I have plot, right? And then here what I do is I go in and say, I assign a color based on conditions, right? If this is greater than that, so color can be assigned, or it can be just a static color. You can actually just say, well, it equals X color, right? So, all right, so in here, I didn't assign any color. Okay. So as far as, maybe I should have, so that when the green, I should have maybe made the cyan green and then the other one red, because every time the cyan is typically above, you're going to be pushing up, and then when the red goes above, you're pushing down. So then maybe that's something I should do, and then let you replace it in the ROM. I like to color code it green and red, but because I don't do things in here, I do it in the Excel sheet. That's part of the disconnect, and so.
And where the cross curves in the vertical of the grid, whether it be at 0 or 0.25, is that an indication of performance one way or the other? Or?
I'm not following you, Andy.
If you put your cursor on where the lines cross.
All right, let me make it full screen first, and then we'll take a look.
Put your cursor on any one of the RVI crosses.
Okay. All right, so I'll do it right here.
Okay. So that's then reading a value to the right-hand side. Does that value have a meaning, or is it just representative of movement? So where you've said with RSI, you like to buy when it crosses the 0 line.
Yeah.
Is this similar?
No.
So where the cross happens, is that relevant?
The cross
in terms of.
Yeah, the cross is definitely relevant. Okay.
And its position on the grid, whether it be high or low, above or below the 0 line, is that important?
Yes. Yeah. So let's say it has more importance if the cross occurs and the peak is down. So then it's in divergence, and then there's a cross. And usually what you'll see is when you're in divergence and then you get a cross, you get an explosive move, and then within a couple of bars you'll get a gap. And you see that routinely.
Okay.
So yeah, it does have a bearing. And you can't see those things until you've studied, you looked at 10 or 20 charts and looked at it. And that's how, I've learned to actually identify little tells that actually help me formulate the best setups that I can take, for the investment.
Cool.
So yeah,
that's really good, really helpful.
Yeah. Now again, I mean, it's not like the Holy Grail, but in combination with a couple of things, it's really quite powerful. It's kind of like right here, we have a white dot cross, and we have the cross here, right? So that's a good example. And and if we look at our trend here, we were down, so we had no divergence. We had a transition, and if, like I say, if this is green, it would probably be better. So then if you just stuck it, like let's just say for argument's sake, you stayed in until it crossed. That's a pretty safe trade. Now, in most cases, for me, for on the again, I'll be in and out. Sometimes I'll get in and out, and more often than not, I end up with a better number. For me, I will end up with, if you look at it from here to here, if you look at the total dollars, the 678. So the way that I try to get in and out using some intraday indication, I often will find there's times that either I'm still at the same value or pretty close to the same value, or often if I have a couple of good red candles in there, I'll tend to be at about 120%. So I can't really move the mouse and show you, but like, okay, so right here, when you see 666, oh no, we don't want to do 60. All right, 678. So at 678, if you take that times 1.2, that's the number that I realize in dollar movement when I go back to compare how I do. Now on this one, you wouldn't get the 120 because you don't really have any red candles pulling back. There's no there's not much that you would get out of that. So like in this trade, from a transition from like right, so from right, well, I don't have a good pair up here. Well, let's just say if I got in here and I were trading this going up, there's a chance on this day or this day I would have pulled a little extra money out. And that's just from learning how to get in and out on the intraday side of the trade. So, and now again, something that V mentioned, normally I would have still traded the same contract all the way through. But in retrospect, after trying to figure out was his statement just, sometimes people will just ignore things because they think that their shit don't stink or they have the answer. But V several times has said things, and each time he said something that I hadn't thought about or hadn't gave weight, or I started to discount it, I always tend to still go back and validate whether his statement had value or not, or anybody's statement. And in fact, his statement about different contract, as simple as that is, no, I wasn't doing it. But now going forward, I will be looking at that. So if I'm in this trade and I get out on this this day in the wick, with the idea of getting out, below the wick the next day, because you can see that's pretty easy to do on any kind of movement up. So if I get out on the shadow here, I plan on getting in the next day. And I've already moved up to where theta on this is costing me more on this day on this contract. Now I will change. And I had never did that before. So that ability there is something I've got out of this class that I did not have. So that's, and I believe based on some very rough number crunching that this will actually increase my annual income by another 10%. So
Wow.
that's a big number.
Yeah,
I mean,
absolutely.
so I think, what he pointed out was fantastic because again, I mean, I'm more like, now I'm likely to get in here. If it starts to bail, I'm likely to get out. And then as it gets down and near close of the bottom on the 1090, I'm likely to get back in. And I get back in the next day, I have a little gap up. And I get so I get a little bit of a gap and I get in the next day. Okay. Maybe I get out in the shadow. Maybe I get out at close. The next day I get in. Look, the open is above. So it depends on where I get out. But I did the numbers and a preliminary and a couple of samples that were recent. And recent ones are a little easier to do because you can, for some reason, if you go too far back, trying to use the on-demand sucks. Just sometimes it just sucks. I can't get time and stamp sales. I can't get a lot of things seem to be missing, and their data seems to be truncated. So I have a problem with that. But if I take things that are a little bit closer, that everything tends to seem to be correct on demand. So on a few of the trades that I went back and did a study on, I found that V's statement was painfully obvious. However, I had failed to see it, and he was just kind of passing when he said it. It wasn't like, it wasn't like, it wasn't demeaning or anything. It was just kind of like, have you thought about? And well, I hadn't.
So if we were to load the person's pivot study on the main graph, what would we see and how would we use what we see in conjunction with the RVI and the white dot?
Let's load it up.
Because that's what you've been talking about earlier. Those are the things you mentioned.
Yeah, I use a combination of those. And so on the PP, all right, so like right here coming in, we have a cross and we have the white dot, and here's the PPS. So this is a combination that I take. Okay.
Wow.
All right, here I don't have the white dot. This is not a trade that I would take. Had I have taken that and bought it at the high of the day and the next day, of course I would have been low. But the indication on that doesn't work out for me. And if I go over here and here's a white dot, this person's pivot, okay, and so the result is phenomenally accurate for me. Here's the white dot with the crossover on the pivot, okay, and all of my indication, no divergence in here. This is a great indicator to go ahead and get in right on that candle and look at that run you got. So now on this one here, I don't have any of the magenta colored dots. I don't have my white colored dot. I don't have anything here to take this trade. And if you look at the ATR, or the true range of these candles in this trend here versus the true range of these, which one would you want to take? This is the one you'd take. Look at the size of those candles versus this crap. So for me, it works really well when you use these in conjunction with each other. Over here, again, you saw that one. Over here, you saw that one. So you can see how well it works. Over here on Merck right now, we have a white dot on red, and we're about to have a cross. Now it's not a cross today, but tomorrow, if the price is up a little bit, this will be crossed. So keep that in mind. Tomorrow, if you look at Merck and you look at these, this cross that's not here today will be crossed tomorrow. And you'd think, well, why is it crossed tomorrow and it wasn't crossed today? Because it is slightly lagging. Okay, I can't do anything about that. But the accuracy working in conjunction with the white dot and the PPS is really good. So what I would expect to see is tomorrow, I would expect to see an up PPS, because again, I always do within one bar, or within one. I don't do within one day. I do within one bar. So if I do it on a weekly chart or I do it on a daily chart, it works for me.
So with the three indicators we've just discussed, the PPS, the RVI, and the white dot, which one of those is going to be less common? So we search for that as the first indicator and look for witnesses of the other two on it. Would it be the white dot that's less common, or would it be the PPS that's less common?
It would be the PPS that's less common.
Okay, so if we search for PPS and look for those PPSs to have an RVI cross and a white dot underneath it, then that would be a very good study to spend some time on.
Yeah, that will give you kind of the insight of what you will be getting the ability to do within that Excel sheet.
Oh, okay, cool. I was just thinking of doing it manually with a scanner.
Yeah, it's not a problem. I don't want to talk about new strategies, but implementing the tools that you currently have. The PPS is something that I talked about. I talked about the 1090. So like right here, if we go through here, here we were within the 90% above. So this is a 1090 signal as well. So with this 1090 signal, with the cross, with the white dot, you had a clear indication. And when you have that many witnesses, you always get a gap, or well, not always, but a high probability of a gap. So you have the tools to be are available, and interpretation is critical. And there's some tickers that just won't work, and you have to separate those out and only keep a list of the tickers that are relevant to the results that you see visually. History repeats itself.
Yeah. That's cool. As I said yesterday, I'm looking for less opportunities, not more. And, I'm looking for quality, not quantity.
Yep. That's exactly right. That's what you have to focus on, is the quality. Best quality setups is the only setups you should be looking to take, because there's a shitload of setups you can exercise, but they're not all going to be. They're not. Some of them are just too risky, and some of them are you're going to take losses that are not necessary.
Yeah, I mean, up until studying with you, I found there was so many opportunities that were doable, but the risk and the reward it just wasn't the right setup because it was unpredictable. I mean, I'd like to get to a situation like you, where I can read the charts as well as you can, because I guarantee that I could give you any starting point in any ticker anywhere, and you would be able to trade it. Whether
Yeah,
that be up, down, sideways, indifferently, or with a strangle, with a condor, you'd be able to trade it successfully. And that's where I want to be. But then just to choose the ones that I really want to trade, the 4, 5, 6 day swing trades where I can put them on, set an alert on my phone, so if anything goes wrong, I can jump in and go and play with the kids.
there you go. Yeah, no, I mean that's and you will get to a point on being able to read price action. I mean, this is so blatantly obvious. I mean, look at these candles, Andy. Okay,
Yeah.
you got an increase in momentum, increase. I mean, right here on this candle, right here, with the separation, okay, that you're seeing here, okay. I mean, from my and by the way, these are not mine. These are the PPS. So if you want my version of the PPS, I don't show these lines. But if you want to load the person's pivot, I mean, my person's pivot clone does the exact same thing. The only thing is I don't show SMAs. I don't like SMAs. But when you do see a spread in the SMA or an EMA, preferably an EMA, this is a good indicator that a strong, high probability indication is going to continue in trend. So when you have this candle, this candle, this candle showing increases in momentum in very small shadows, that was an easy trade for anybody. Any person trading stocks knows a damn thing about price action would have said, "Yep, I'm going short."
And
Without any, right?
You say bail at the curve.
Yeah. Well, yeah. I mean, or you just at the close just get out. I mean, so if you wanted to just do, and you'll see that over and over and over, where you'll see an increase in momentum or a shift in behavior and the price action. This was so blatantly obvious. I mean, it was just painfully obvious. And but a lot of traders, they're going to wait until they get that cross there, or they'll look at that cross but they'll never take it because they'll say, well, it's just below. And so they don't have that commitment. But here, if you look at the white dot and you had the cross, okay, we had a couple of things going on here. Now, sure, it's not everything that we like to see, but what we do have here is on this one, we may have been at the threshold of 90%. So I'm not sure, but on this one, we would have been in within 1 day on cross, within 1 day on the white dot, and we would have been on a 10% of the range on the 1090 SCP. So you would have had several witnesses all on that bar. So even taking that bar and going short would have been an easy trade when you have 3 of those witnesses. Now I have 7 witnesses total. Okay. 7 witnesses. And when I have all 7 witnesses, I'm all in. All in to me means 20% of the volume. That's what it means.
Can you share those 7 with us?
Well, I've talked to you guys about some of them. Yeah, you know what I'll do? I'll put them all into just a simple bullet format. I'll drop it into the room, and that will help you guys. And then some of the stuff is just related to price action. But yeah, there's 7 witnesses total. So I'm not like the U.S. where we got to have 12 in our jury pool. I only need 7.
7's plenty. I mean, quite often you find 4, don't you? 4.5, and that's enough to prove the trade anyway.
Well, there's times where, just as an example, I may have 1 or 2 witnesses and I pass, and then the next day I'll have 3 more witnesses. Remember, I will often look at within a bar or something along that line. So if it's a weekly bar and I'm within 1 bar on a weekly, and all of a sudden I went from 3 witnesses to 6 witnesses, hey, man, I'm in that.
Yeah, it's Christmas.
So let's say ATR is small, right? Because ATR is one of the most powerful tools you have. I mean, ATR is a kick-ass tool. And what I mean by that is, for clarity, let's just take the price. This is an $81 stock. Go load 10 $82 stocks, or really, really close, and then load ATR and look at the number, the last number on ATR. Let me show you how valuable ATR is and how poorly it's used. Okay, the last number here on ATR is right here. It's 1.61, right? Okay, that's the last number. Now, load 10. This is so obvious, Andy. I kid you not. Load 10 different stocks. Look at 10 different stocks between $80 and $82, or 80 and say $84, and look at ATR. Find the one that has the largest ATR and see how to trade that one, because that's the one that has the biggest candle movement. That's the one you're going to make the most money at. That eliminates most of the junk right off the table. So if you're trying to find the best trades are the ones with the higher ATR, aren't they? So if you're trading in a range, right? If you're trading in a range, I told you guys, look like between 80 and 120. Well, and if you, I don't need the ATR anymore down here. I can tell you pretty damn close what it is. Okay, I've done this so many times. But if you're a newbie or novice and you don't understand again, ATR is, look, there's 10,000 indicators, Andy. And you know what? ATR is the only one that's worth a damn on its own. It is the only one by its own, on its own, that has value.
Wow.
Literally. I mean, out of 10,000. Because now you have a tool that you can compare all the stocks in the same price range, and you can determine which ones have the most volume or the most movement. And we are only trading, we are traders because we are only looking for movement. We're looking for volume. Okay. And how do we get volume? How do we get a change in ATR? By volume. So out of all the tools you have that you can use to try and find or narrow down the pool to look at, ATR is the only one you have. That's why Joe's study was really important. When I looked at it, I'm like, wow, okay, that's not a bad idea. So this study here, oops, I'm sorry, it's in a scanner. So in the scanner, we have a study that was done by Joe. And so in this one, personal, right here, okay, this is the guy he hosts Wall Street of Wizards. He's not really a trader. He is a lawn maintenance guy, right? That's what he does. And he seems to be more interested in cutting lawns than in his own chat room. But he did come up with this study, and this is the study. When I asked him, why are you using ATR? And then he told me that he uses the ATR related to earnings because he found that if he traded the ones with a higher ATR, the gaps on the earnings are typically larger. He found that by accident, but it's absolutely perfectly logical. So yeah, so ATR when I saw his because I told him when they asked me for some help, they wanted to figure out a better way to trade low float. I'm like, okay. So I gave them some guidance on trading low float, and they're all doing okay. The ones that are trading are doing okay. I mean, Sean is making a living. He's 10 to 15,000 is what he's doing a month, so he's doing fine. But this ATR here, that's just low float stock trading, not option trading. So this particular indicator or ATR used in a study is really good if you're looking at trying to filter out the stocks that are going to waste your time on. Right? I mean, you don't want to trade a stock with a low ATR value. You want to trade one with a higher ATR.
Yeah, and I agree. It's one of the things I've always been keen to look at as well. So I mean, I've read the book Turtle Trading, Richard Dennis, and they focus quite a lot on ATR then for their movements.
Yeah, and actually think about, I don't know about you, I mean, hundreds of bucks, and when somebody gets onto something that's right, you tend to see that will be shared in a few other books. So all right guys, well, that's kind of it today. I know I didn't cover a lot, but I did cover things that are relevant to success. I did cover the schedule.
Yeah, that's been really good. I think tonight's been a really good lesson, and certainly seeing those three elements all together on one screen can help everybody, I think.
Yeah, again, I mean, there's, like I say, there's tens of thousands of ways to trade. again, the goal is if somebody wants to settle on that, that's fine, but got to stay focused. Don't just keep jumping around. So, because the more time you stay focused on a specific style of trade strategy or setup, the more successful you'll be because you refine it to specific stocks, and you just get better. You get better. It's like wine, right? You just get better. So
Excellent. Cool. So just for clarity, we're not going to be here tomorrow night. We'll be here Thursday.
that's correct.
Okay. Cool.
Tuesdays
Good
and
to know.
Tuesdays and Thursdays going forward. Now, if you guys want to get hook up, I think that's great. The 2 days that I opted to step out and I went ahead and did a little spying on you guys. You guys were really communicating very well. A couple of you were speaking that I hadn't heard speak to the group, and I think that's also going to help each of you develop your own self confidence as a trader.
Indeed. And you'll still be around during the day, really, to jump in from time to time?
Yeah, and if needed, like sometimes I don't have the Discord open, but if needed, anybody could just drop me a call and say, "Hey, could you jump in the room for a minute?" Just send me a text message.
Sure. Perfect.
Okay.
Great. Well, thanks ever so much again.
All right. Everybody, take care.
Yay.
Yeah, hon. You want to give me a hug?
Who are you talking to?
Andy. I was talking to.